Good morning, everyone, and welcome back to Morning Markets, where the team at True Potential discuss some of the key news items over the past 24 hours and how that's impacting asset markets. Today, we'll focus in on a higher level of volatility in equity markets. So, yesterday's equity market performance was more volatile than we've seen in the recent past, and that was evidenced by an increase in the VIX index, the implied volatility moving back above 30 to a level that we saw back at the beginning of September when we had the volatility in the technology sector. Yesterday, the volatility in the main caused by COVID-19, the rising infection rates, both in Europe but also in the US, where there was more of a focus on this yesterday, and that definitely did play into market sentiment in the US, and in particular just the market contemplating what does this potentially mean for economic activity in the coming weeks and coming months. There was also in Europe yesterday where we saw the Euro Stock 600 down about 1.8%, a disappointing report from one of the Europe's bellwether technology companies, SAP, which focuses on enterprise software. And it had an earnings report that indicated some disappointing trends in terms of orders and how some customers were delaying implementations and that pushing out some of the targets they had set. The reason I mention this, the stock fell some 20% on the day, one of the largest intraday moves that we've seen from that stock in particular for probably about 20 years. So it's just an indication of how the market is reacting to some of these disappointments. And the challenge at this point is to discern whether the update from SAP is very specific to themselves as a company, or whether there's some slightly broader trend within that, just in terms of a slowdown in activity. On the economic front, yesterday we had new US home sales, which fell 3.5%. That's off record highs. We were at a 13-year high just last month, so a little bit of traveling and arriving there. But just it marks the first decline in activity in recent months, and what has been a very bright spot for the US economy in terms of the housing market. In Germany, we had the IFO Business Climate Index, and again, that just showed a slight weakening month on month, and that's again not surprising given the backdrop that we have been discussing over the past number of days. I think the other key thing to focus on from an equity market point of view is we got confirmation yesterday of the listing of Ant Financial in Hong Kong and Shanghai. This will be the largest equity IPO that we have seen this year, surpassing that of Saudi Aramco earlier. And what does Ant do? Ant is a subsidiary of Alibaba, the Chinese e-commerce group. It's primarily focused in financial technology. It facilitates asset management, a very significant payments business, insurance, and other activities. So this is going to be the largest IPO, some $34 billion being raised in the offering, valuing Ant Financial in excess of $300 billion, making it one of, if not the largest financial listing in the world, and when it lists later this month, early next month, just after the US election. So just an indication that things continue to move forward, things change. I think historically we'd have probably expected to see that type of offering take place in both Hong Kong and maybe in the US, but given the backdrop that we've been discussing there, clearly that's not possible, or something that Alibaba wanted to potentially pursue at this point in time. With that as a backdrop yesterday and that increase in volatility, it wasn't surprising to see sovereign bond markets yields come in a bit. If you remember last week, they had moved out, and just with that slight more of a focus on COVID-19, yields come in slightly as people sought the safety in the bond market. So the US Treasury 10-year moving back to 80 basis points. Not much change in the UK, with UK gilts remaining sort of around 27, 28 basis points on the day. Currency markets, again, just the usual dynamics that we see in that. S&P 500 weaker, or equity markets weaker, and dollar strength as a result of that. So the dollar stronger against the basket of currencies yesterday. Primarily that strength playing out against the euro and sterling. In Asia overnight, we've seen equity markets generally follow the lead from the US and Europe yesterday, so markets a little bit weaker over the course of the day. Economic data points in Asia positive in the sense of industrial profits from China, and also third quarter GDP from South Korea. Probably the one country that is coming through this very well in the sense of the test and trace and how that's worked, but also the economic impact on GDP looks to be relatively muted so far. We also heard from a number of financial institutions, HSBC, Banco Santander, both indicating slightly better operating trends and a willingness to resume their dividends, provided the regulatory environment allows for that. That's it for today. Please join us again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.